I've structured my job though so that I'm not a day-to-day emergency guy. Right now, I'm just a monthly emergency guy, so I can take my time on those problems. It gives me a month to work through those problems. I don't need to be there tomorrow.
Welcome to the Freedom Point Real Estate Podcast, where we talk about creating more time freedom through passive real estate investing. Passive investing in real estate challenges conventional investment wisdom. We are passionate about learning and sharing resources with others who are ready to transform their investing mindset. Quick disclaimer as always, I am not a CPA, I am not an attorney or a financial advisor. This is not financial advice, not telling you or anyone else what to do. The views and opinions expressed in these podcasts are provided for education and informational purposes only and are not necessarily the views of my employer, ADP. I'm glad you're here. Now let's dig in. All right, welcome back, Freedom Point podcast listeners. Thank you again for jumping into another episode of the Freedom Point. We're so thankful that you're with us today. Thanks for jumping into another episode. Looking forward to providing you with some additional tremendous value. I have an awesome guest with me today, Dusten HENDRICKSON. Dusten, welcome to the show.
Hey, thanks for having me, Jeremy.
Yeah, absolutely. Look forward to our discussion. Dusten, just to give my audience a quick little background on yourself here. Dusten develops and invests in wellness-designed multifamily real estate, existing value-add real estate, and he passively invests in other projects as a limited partner investor. Collectively, Dusten owns and asset manages 869 multifamily units, approximately 25,000 square feet of commercial space, and is passively investing in over 2,000 units as a limited partner investor. Dusten has been involved in real estate since 2002. So quite a bit of a mouthful there, Dusten. Is there anything additionally in terms of real estate specific experience or backgrounds that you would like to share with our listening audience?
I've done more than that. That's just what we currently have. And that's actually not accurate anymore. The numbers fluctuate all the time. They're always going up. So it's a little bit bigger than that. But we are removing some of the commercial space. Actually, we're selling that off. It's just not in our line of our silo, I guess. We're going all vertical into multifamily. Yeah, but before this, I've done single family developments and lots of house flipping, custom homes. That's where I started. And then as I built duplexes, I was like, oh, let's do a 10-plex, a 20-plex. And then it just got bigger and bigger. I went to a Jake and Gino conference, discovered syndication, and then I just basically need to learn how to scale. So learned how to scale, learned how to raise money from my partner, Omar. And that's why we're here today. We got rid of all the single family stuff and just straight up into multifamily.
And what specific market locations are you expanding your portfolio and reach into? And what's maybe kind of the overarching business plan when you acquire multifamily units?
Sioux Falls is like our favorite market currently. We haven't been acquiring many units. We did do a HUD assumption though. We're doing a HUD assumption currently that closes on I think the 15th in Sioux Falls. Other than that, that's our only deal we've purchased this year, and it was only because it was an assumption. And there's not very much deal flow to get into without assuming you're going to have appreciation. So the conservative investors really like this deal.
And why is it that the conservative investors like the deal versus maybe those that are a little bit more risk tolerant?
Because it's a 3.8 DSCR.
Sure. And is there a value add element to the business plan?
Yeah, it's a mainly management, which is our favorite. No construction, so we don't have to worry about dealing with expensive contractors and all that delay and all the kicking the tenants out and renovating. I feel like value add is much harder than people give it credit for if you actually have to physically flip or if you have to flip a tenant. If you need to get better tenants in, I've seen lots of projects fail because they thought that they could get in a better tenant profile.
Yeah, absolutely. What you had mentioned, I think that one of your strengths or focuses, I should say, is in wellness designed multifamily real estate. So can you explain to the listening audience what that means?
Yeah, wellness design makes you feel good. So we put in things that make tenants feel good so that when they come to our place, they realize they feel better living there, so they want to stay. And we get a premium for that because when they go anywhere else, nothing compares to our unit. And they're like, it's only a couple $100 more a month to stay there. I'll go stay there. We also have a smaller unit that they're comparing to. Our one bedrooms are smaller than most one bedrooms, but we design them with bigger windows and different things so that the space doesn't feel as small. The storage is better. All the things you use in your house, in your apartment are better. Nicer appliances, countertops, washer, dryer, all that stuff.
You mentioned that you're also an investor as a limited partner and maybe other sponsors' investments.
Yep.
How is it that you evaluate which sponsors are worthwhile to work with from the lens of them providing some fiduciary responsibility of protecting investors' money? There's a lot of sponsors in the space right now. How do you evaluate which ones it makes sense to partner with?
You have to do a deal with them to really know how they are. In my opinion, you'll never really be able to vet someone totally because you don't know the decisions that they're going to make until you've got money with them. You don't really see, it's not near as transparent when you're looking to place an investment versus when you place an investment and you get to see all the paperwork. You could request most all the documents unless they're lying and fudging numbers somewhere. You could see it pretty easily. But you do all your research and it's more relationship based. Like, hey, is this a good guy? What's he going to do when stuff goes sideways? Is he just going to worry about himself, or is he going to worry more about his reputation and protecting his investors? And so if anyone's, investor first, I like to go with them. But right now, a lot of people are hurting. And so you might think that you invested with a crappy syndicator, but he's not. It's just the environment's horrible.
Yeah.
So, you got to do deals, and you got to do multiple deals with a bunch of that's what I do. I did multiple deals with a whole bunch of people to find out who I really liked. And then I kind of left in the wayside by who I used to initially invest with. And then I mainly went with just a couple syndicators.
From your vantage point, I know that right now there's some headwinds in real estate, and there's some challenges currently on the landscape. What would you say are some of the greatest challenges that sponsors are facing today on deals that they're actively managing? And then what would your advice be maybe for that sponsor that's looking to, either get into real estate in 2024 or perhaps maybe look to acquire that next asset?
As far as acquiring the next asset in 2024 for a newbie, that'd be hard to give any advice because they have a tough hill to climb. I would say just get in the market and don't expect to even get a deal. Just start looking and educating yourself. And if it takes you 3 years, 4 years, it's way harder to buy a deal now than it was 5 years ago, and even harder than 10 years. So like the longer I come through my career, the harder it gets to buy real estate. And that's one reason why I like it so much, is that it continues to hold its value. Even though you see all this going on, you still can't go and buy a deal. It's still really, really hard. And it still doesn't pencil. But I'd say the biggest challenge is cash flow. The DSCRs on all these are atrocious. Everybody that I see is maybe at 1 or mostly below. Almost all the deals I invested with in all these big cities are negative cash flow right now.
I don't want to assume that the listening audience knows the acronym DSCR. Could you explain to us what that means?
Debt service coverage ratio. So 1 is break even. No money to investors. It's basically you're paying all your debt. And so anything above that, and banks on new development want to see at least 1.25 right now. In the heyday, it was like 1.15, possibly 1.1. That's super low. Super low. You're not making any money at 1.1 because any little emergency is going to take all your cash. So they see 1.25. And so like I say, in that Boulder deal is a 3.8. Our development deals are a 1.25 to 1.3 right now. But there's a lot of value to be made on the upside of the development deal because there's less equity. But yeah, the DSCR is just, can you make your payment or not? Anything at 1 is super, super dangerous. That means it's not sustainable. Anything goes below 1 is not sustainable. And how long can you go below 1? I've been seeing people try to increase their occupancy, and so they're offering concessions, and nothing's working. Their cash flow, no matter what they do, their cash flow is in a straight line. And they're hemorrhaging cash month after month, cash. No matter what they do, nothing's working. So At the same time, the interest rates are going up, the rental market's deteriorating, and people must be just doubling up. That's the only thing that justifies the decrease in occupancy. Plus, there's some stuff coming online.
Right. What are some options that a sponsor might be able to look into or execute in the event that their debt service coverage ratio is near one or slipping below one?
Cut your expenses first. I always go to expenses first immediately. Those could chop off the block and everything goes to the bottom line. You don't have to pay a percentage. Like when you increase your income, you got costs for that income. Um, so I'd say that cut your costs as soon as possible on costs that, like, okay, yes, you normally clean once a week. Can you get away with cleaning once and one and a half time, every 1.5 weeks? Can you do just minor things like this that people might not notice? Or like if you clean twice a week, can you clean once a week? Okay, can you do things to really reduce your costs? And then can you do a capital call? Can you be really transparent? You should be super transparent. The sooner you say, hey, we might have a problem in a year, versus saying, hey, we're not going to have any problem. And then a year you're like, dude, we got this massive problem. No one's going to give you a capital call, but if you warm them up and try to figure it out, it's more likely you get a capital call. If you can't get the capital call, you got to go to preferred equity or all these other different things. But in my opinion, you got to cut costs first. Immediately cut costs.
Yeah, I've heard it said before, and I'm sure you have too, that bad news doesn't typically age very well with investors.
No.
Well, what from a limited partner or a passive investor perspective, there are deals that are periodically coming online and become available to limited partners to invest if they have a relationship with the investment sponsor. Somebody that's maybe new to the space, maybe they've never invested passively before, or maybe they've done a deal here or deal there. What would be some of those red flags that investor should be on the lookout for? When they're evaluating whether or not to put their, hard-earned money, into a deal?
One thing I've noticed is that nobody looks at performance, ongoing performance of the deals. They look at the sold deals, but those all sold 2 years ago or 1 year ago. Who cares? Sold deal doesn't mean anything. Environment's totally different now. How do all of their current deals, how are they performing? How are those performing? And then if you look at them and like, they're no good, what are you guys doing different now? Maybe they'll show you all the different things that they're doing. And then you have to be like, okay, am I comfortable with that? They had this structure before and they were getting these returns. Now they have a different structure. Are they really going to get those returns? Is this structure better? Does it protect from the risk? Yeah, maybe your upside's not as high, but you don't have as much downside. But that's what I've noticed. No one looks at actual ongoing performance of deals, and that's the most crucial to see where they at. Show me all your deals you got going on right now. Most people won't give you that information, but some will.
I'd like to get personal with you now, if you're okay with that, Dusten. I'd like to ask you some personal questions. First of all, you've got a wide range of real estate projects that you've done in the past, that you've got going on now, maybe that you're looking to get into. How does Dusten manage his or balance his personal life with his professional life, with all the different things that you've got going on? I know in your personal life, such as reading and playing basketball and cycling and spending time with your family and friends.
Well, my wife says I work all the time. So that's not necessarily true. I'm always thinking about work and brainstorming, but I'm not always distracted by work, but I can be available at any time. So basically I can be available for my job when needed. I've structured my job though, so that I'm not a day to day emergency guy, right? So when I was doing construction, every day I'd get the emergency. So I have to work. Now I'm just a monthly emergency guy. So I can take my time on those problems. It gives me a month to work through those problems. I don't need to be there tomorrow. So I never have to actually go to work tomorrow. I don't have to do that anymore. Like if I wanted to stay at home all day today, I could have done it. It wouldn't have been a big deal. So that's how I balance that. Anything that's more important, I go and do that. But the stress, I just leave that up to God. Like all that stuff goes in God's hands because it's his plan anyway. I could never accomplish anything I'm doing by myself.
Would you mind sharing with our listening audience a little bit more about your personal faith journey?
Yeah, I'd love to. I get kind of emotional when I talk about this stuff, though. I don't know why. It's crazy. When I first started, so I was kind of indoctrinated into a really religious Lutheran church when I was younger. And I learned, and so I didn't understand it. Nothing made sense. Everything was contradictions. When I read the Bible, no one could explain everything. They just use just small little chunks to try and explain, and then they just say, "Well, I don't know. You shouldn't question so much. You should just believe." And I don't really agree with that. I feel like God makes you question things to find the truth. So then I just started seeking, but I started out down like the naturalist path, Buddhism, just learning all these different religions, and I started realizing that every single point that is made, that's a strong point. Even these other religions would bring in Jesus to describe it. So then something clicked, and I started just reading the Bible every day, and just faith grows stronger all the time from the Word. And I don't know. Jesus loves you. That's all I can say.
Yeah, no, thank you for sharing that with me. I appreciate that. It kind of reminds me of the story of Jonah, a little bit, right? Where, he had in his own mind the direction that he wanted to go, with his life and, put the crown of thorns on his own head, versus following maybe the plan that God had for you. And I also just think about just in general, right? I mean, there's so many different, truths out there, so to speak, but there's only really one truth, right? And
Yes.
so, and I appreciate you sharing that, with our listening audience, because, the perception that's out there in the world isn't always the reality. And it's interesting that, other religions or, other ideologies, oftentimes, are built upon, biblical truths, because we know those truths to be, truth and have withstood the test of time. So
I do feel that, like, truth, right? Once you understand truth, once you understand Jesus, everything is explained so easily. Like, you understand how the world works, and you understand all these situations much easier.
yeah. And definitely that can be incredibly valuable in the world of real estate, because real estate is, primarily a relationship, business. And second to that, just like I've said before to the listening audience, birds fly, fish swim, and real estate just falls apart. That's just typically what happens in the business. And so knowing that you have, the support, of those that you've built relationships with, and you have the faith and trust that, God's kind of walking along that journey with you, that in and of itself can feel incredibly comforting, especially in a business where things aren't always going the right way.
Yeah. I I tell people that most of my job, I actually just pray and manifest things. I leave it way more up to God than whatever I can do. And
Yeah.
then lots of my problems just solve themselves. So you start going down that path, and your life gets so much easier.
Yeah. Yeah. You have a huge weight lifted off your shoulders, I'm sure. What, when it comes to maybe what's next for Dusten, what might be on your kind of next, bucket list item that you want to check off, whether that be, personally or professionally?
I don't see, like, I lost most of my love for, like, material things in the world going through this journey. So I don't really have any, like, materialistic goals anymore. I just probably want to give more money to different various things. Although that's hard. That's hard too, because then you all of a sudden you have some money to give, and then everybody's asking you for money, and then you're like, well, where do I actually give? Where can I make this impact? So it's not that easy to give money either, because most of the charities that you give money to, they don't make any impact. So you have to like, where do you actually want to make the impact, and is it going to make the impact you see? I feel like I make the biggest impact just giving my time to people that I see.
Yeah, your time and your talents, I'm sure. What might be one or two book or podcast recommendations that you would encourage our listening audience to check out?
I think everybody should, if you want podcast, Andrew Huberman's amazing, but then there's this guy named Dr. Berg that has the most awesome natural methods and ways of losing weight and, like, getting healthy, and what food you're supposed to eat, what food you're not. And I found that his methods work every time. So if you start fasting the way he tells you, and you do start doing different things, you can you can set your weight and you can set your health wherever you want to.
Interesting. Well, we'll have put that in the show notes. Any other recommendations?
The book. So the main book that somehow guided me to true Christianity was Meditations by Marcus Aurelius, which might sound weird because that doesn't have anything to do with Christianity. It's just a philosophy on life. But then when you realize, when you read the Bible, it has every philosophy on life you can possibly have.
Sure, we'll have to check that one out. I have not heard of that book before. What would be maybe one or two different ways that our listening audience can connect with you to learn more about what you're up to?
Go on my LinkedIn. I'm most active there. I have the most followers. We're posting every day, every other day. Also, website has all our information, so you can contact us. That's just mailboxmoneyre.com, RE as in real estate.
That's great. Well, I really appreciate you being a part of our show today, Dusten, and thank you for providing some tremendous value to the audience.
You're welcome. Thanks a lot, Jeremy.
You bet. And listening audience, thank you again for joining us on another episode of The Freedom Point. Thank you for being here, and we look forward to having you join us on the next episode.
Thank you for hanging out with us today and for listening to the Freedom Point podcast, powered by Starting Point Capital. This show is for entertainment purposes only. Nothing said on this show should be considered financial advice. Before making any financial decision, please consult with a professional. This show is copyrighted by the Freedom Point podcast. Written permissions must be granted before syndication or rebroadcasting. If you're interested in connecting, you can find contact information at startingpointcapital.com.